Alright, this is going to be a short video. I just want to talk about mindset and the mindset that you need to develop if you're going to manage your own stock portfolio, especially if it's a highly concentrated stock portfolio. If you just buy the index or you have 100 different stocks in your portfolio, then the fluctuations aren't going to be very drastic. But if you own a portfolio of a short list of highly concentrated stocks, your portfolio will often move a whole lot more than the overall market. And so if we just look at my portfolio for today, you can see that overall I'm up 14% for my account. But if we just look at today, I have a return of 3.69% on my portfolio. But if you look at the market as a whole, the S&P 500 is basically flat. The Dow Jones is down a little bit, and the QQQ is up about 1.6%. And that's actually very typical for my portfolio. Usually I compare it to the QQQ, and my goal is to beat the NASDAQ consistently. But often, whether it's going up or down, my portfolio will often move roughly double what the QQQ does. And that can be in line or drastically different than the S&P 500. And the thing is, we want that as single stock investors. That's what we're looking for, is over time, we're trying to pick stocks that are going to drastically move more in a positive direction. And the thing is, those also move down, much quicker than the index. And if you look at my stocks, the reason that my overall portfolio moved that much today was because I had a few out of my 11 holdings. Coinbase went up almost 13%. Stone went up almost 6.5%. Crocs went up over 12%. Palantir up over 8%. So when you only have 10, 11, 15 different stocks, and you have a day where 3 or 4 or 5 of them move up like double digits, even if they're only a small percentage of your portfolio, it makes a big difference. So, even Coinbase, I only have like roughly 2% of my portfolio in it, but when it moves up 13%, that's a couple $100, and that's enough to kind of move the needle. So the difference, if you're investing in a mass quantity of different stocks, then one could go up a huge amount and you'll never see, it'll just be a blip on the radar. You'll never see it reflected in a really large way in your overall balance. And of course, on the flip side, you could have one crash really drastically and it won't really hurt you very much. But what I'm going for, and if you're following this channel, probably what you're going for, at least to some extent, is to have a concentrated portfolio so that when you're right, it actually makes a difference. And one of the things I had to learn when I was first starting out is, if I do research on a stock and I feel really strongly about a stock and I invest just, let's say, 1% in that stock, and over the next year it doubles, like, who really cares? It was only 1% of my portfolio. It's not even noticeable. But if I can make that 3, 5, 10% of my portfolio because I really believe strongly in it, and it doubles over the next year, now that's meaningful. Now that's starting to make a difference. And if I can do that over and over again with the different choices that I'm making, that volatility is going to work better for me. That volatility is really going to pay off. Now, to do that, the challenging thing is you have to disengage your emotions. You have to get used to being uncomfortable with making decisions with your portfolio. You have to invest at times where it's hard. You have to be okay with doing nothing when it's hard. When the stocks are going down, you have to do the thing that no one else wants to do. You have to hold, and you have to buy more in the right companies when it's challenging. And then sometimes when things are going great, some of your stocks are flying high and the prices are just running higher and higher and higher. Investors are having that feeling of euphoria and everyone is piling into those stocks. Sometimes that might be a time that you have to do the opposite again of what you really want to do. And instead of holding on to it, you have to start trimming your position or maybe even sell out of it completely, depending on what's right for your portfolio. All right, so I said this one was going to be short. That's it. Have a great day.